Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday. It's February 20th. Hope you guys are having a great day so far. We do got just one item here, really. We start getting a lot of slack in the data that's supposed to be released. So today we were supposed to get some housing data released, but unfortunately, due to the government shutdown, they're behind in trying to catch up on the previous numbers. So we're going to get these numbers eventually, but they'll be delayed as a result. So I guess we'll have to just kind of bear with it. But in the meantime, we do get the FOMC minutes later today by 11 o'clock Pacific Standard Time. Now, some investors are saying this is probably the most important data we're going to get this week, primarily because what they're looking for is they want to try to see what the details of what the Fed's thinking was, their 180 about shift in their terms of rate hikes and stuff. Initially, they said, it was just in December, it seemed like they're ready to do some more rate hikes in 2019, and then January, it was a pretty quick shift. Now all of a sudden they're going to halt it, and then they even threw uh, the balance sheet onto the table where they're going to make stop trying to lower the balance sheet. So these are important things. These are things that they're going to be looking at is the details as to what led to the shift, and then more details about the balance sheet, decisions behind that, and those are the things that they're going to be looking towards on this. So some investors think this could be the most important piece that they're going to news that they're going to really look at this week. Now, if that stuff's not in there, I'm sure investors might get a little disappointed. So it depends on the stock market. Things could get a little bit volatile after 11 o'clock Pacific Standard Time here once they read the minutes and decipher through it. So just be prepared for some little volatility later today here towards the end of the last few hours of the trading hours. So let's kind of jump ahead here to the headline news. Stock market, I'm sorry, actually, the stock market is up a little bit this morning. I forgot to change that. My apologies. It is lightly trading. It is all in positive territory, but it's lightly trading. They're just kind of waiting for the news of the FOMC before you see any more movements. We still got continued. There hasn't been any really news on the progress of the China trade talk, U.S.-China trade talks, but they are ongoing right now. They started up yesterday again in D.C. There's been some tweets here and there from President Trump. The last one was saying that it sounded like it got most people are getting the impression that the March 1st deadline now may not be a hard date now. So it looks like things are maybe progressing enough where we could run past that. We might be close enough where he will be a little soft on that stance on that date. So again, things look like to be progressing. That's leading to some optimism in the markets, and we'll kind of, I guess, we have to sit back and wait and see. All right, so let's kind of move ahead, see how this is affecting the bonds. Bonds are down a little bit today. We're down about 2 or 3 basis points so far this morning. As you can see, we're still in this middle range here. It's not enough to really make any change in pricing on our interest rates. We did close up 19 basis points yesterday, so there's really not there's really no change to be made in the pricing and the interest rates. So we're about kind of where we were yesterday. Now that could change later in the day. Just again, could be a lot more volatility as I've indicated earlier on the FOMC minute. So if the stock market starts taking off, the bond market could drop, and we've got a bit of room here where we could drop down here with the floor of support here. So just be cautious today, as especially this afternoon, where there could be a lot more volatility here. Now, traditionally or historically speaking, these haven't always been the best days for mortgage-backed securities when we get the FOMC minutes. So just let that be out there and be, again, cautious out there. Let's take a look at the yields. Yields are up slightly. They're up to 2.65 right now. Again, they're kind of in their middle range right now before the ceiling of resistance at the 25-day moving average, and then the Fibonacci just below it. So we got a little bit of room in both directions for yields as well. All right, so again, rates are about the same. Shouldn't be any pricing changes. Should be about the same. But again, we got some volatility coming ahead, so be very cautious. If you guys want to see any of the news, I will update you guys on Twitter. If you guys want to follow me on Twitter at Mike Bjork, I will be posting any updates on there. You guys have a great rest of your day. Thanks so much for watching. I'll see you guys tomorrow. Bye-bye.